How are you doing today? Okay, this is a new video, and in this class, I want to teach you on how you can trade fair value gap, or what we call imbalance, or liquidity void. All right, I did not take authority right on this particular uh, concept, right? FVG, imbalance or liquidity void, was not a word that was gotten or that was derived by me, right? It is basically for other trader, the likes of ICT and other people that have actually talked about this. But majorly, how to use it is actually designed by me, right? Basically, I find a way to trade it all by myself, and a rule-based one. So in this light, right, the concept, just like what I said, was the one that was innovated by ICT, but how to use it is basically what I've actually gotten all by myself. All right, if you are a new viewer, right, I would like you to click on the subscribe button and like this video. And if you are a returning viewer or maybe a subscriber, thank you for the love and thank you for always supporting us. So in this particular class, I want to really teach you on how to use fair value gap and imbalance. Right, this is what I promise my students. I just make plan to make it public, even though I'm not going to teach everything that isn't there for it. If you really want to enjoy more, right, you can actually join the mentorship. I'm going to make another video on this also and post it on the mentorship class so that they can have a better idea on it. But anyway, what I'm going to teach now, you are still going to get much more value from it. Okay, now, you will know that many people have actually thought on how to use fair value gap, but basically, this is what I've discovered in the market and how price actually work out. Now, I'm going to show you the trade I took on this particular pair. I mean, on based on this particular concept this week, so that you can really learn from it. All right. So this is an higher time frame, and basically, I've also taught you on how you can the three basic rule uh, to trade from the three basic rules. All right, number one, we said you should get the directional bias. Number two, we said you should get the good OB. Number three, we said get a lower time frame, confirmation. And whatever thing we are really going to do here also will be in line with these three rules, but we are not going to be using order block now. We'll be using the fair value gap. So we're still going to follow these three basic rules as the case may be. Now, look at this particular direction. Now, market is going in a bearish move. We have a lower low, right? We have a lower high, all right? We have a lower low, right? Then we have a lower high. Then price failed to create a lower low. They eventually price break market structure. You know, on a normal day, many people would have seen this as a shift in market structure, and they'll be looking to buy from this particular area, this particular OB that I have marked. This is the ultimate zone that people will be buying, and really there is nothing that says that this particular zone should not really work out. All right, so this is what I call a buy to sell, right? The market maker or liquidity providers or the composite operator, right? They are moving this price higher, right? And they would have actually brought so many people into the consciousness that the market is now going higher, and many smart money traders would have, or maybe liquidity provider concept traders would have been looking to buy from here. I myself would have really been expecting that, okay, this is a shift in market structure, then let's start looking to buy from here. Now, basically, this particular one here, right, should be our buy rejection zone. We should really, we should consider this as our buy rejection zone in the first place before market now came to break it all down. Now, let's assume that all this particular impulsive move, this bearish candle, is not here before, right? This is the only thing that we have. Now, we are expecting price to retrace back into this particular order block, right? For us to I'll call this a bias rejection zone for me to buy from, or let me tag this as a buy rejection zone. All right, this is going to be a buy rejection zone. So we are expecting price to pull back into this particular zone for us to continue to buy. Now, there is a reason behind that. Now, because market structure has been broken, then we have an impulsive move that break market structure, and definitely this particular price action, this particular candlestick or this particular order block is rejecting on another order block here. So definitely we are expecting to buy this pair up, but definitely based on our three rules, we still can still consider that market structure is still bearish. So what are we really looking out for here? Now, when markets break market structure to the upside, now instead of price action to really come back to this particular candlestick or this particular block, then began to uh, go in an upward movement. But what did we have then? Price just gave us an impulsive move down, then just continue to go down. But this impulsive move is really a very a strong one, right? Broke through a major order block. So immediately I see something like this. Now, we should really now, because market structure has not been broken to the downside. Now we should also be expecting price to pull back, right, to our order block here, which is going to be a bearish order block for a sell, because this has been invalidated, right? Price has this particular order block has been validated by the virtue of price action being impulsive and breaking through this particular area, taking out this particular low and also breaking this major structure. So in this light, we are expecting price to really retrace back to this, but in some cases price would not retrace back to this order block. Now this is going to be our sell rejection zone, right? It's going to be our sell rejection zone. Price might don't really retrace back to this particular zone, but it will really come back to the last order block, the order block that's supposed to serve as our buy rejection zone. This is where price will come back to retrace back to that zone. Then that particular buy bias rejection zone will now serve as our sell bias rejection zone. And be reminded that price has already traded through this particular buy rejection zone in an impulsive move that have broken structure to the downside. So this particular zone that I was expecting to be my buy rejection zone, I will now change it over to a sell rejection zone. But majorly, I'm not going to use this tag again. We'll just tag it as what we have here, as a fair value gap or an imbalance or a liquidity void. So we are expecting price to retrace back into this zone so that we can then look into lower time frame or drop into lower time frame for us to get a confirmation, then continue to trade this particular price action down. I hope you get what I'm trying to say. Now, the basic things is that the order block that was meant to be a buy rejection zone, price traded through it and violated that particular block. Then because of the impulsive rate that price really moved through that particular block, then we are expecting price to retrace back to that same block that was meant to be a buy rejection zone to now be a sell rejection zone. Now the reverse is the case. Now if you're actually going to look for buy, right? Now let's say this is really going to be let me put this in inverse scale, right? Look at this. Price break structure. Don't forget, market structure is bullish. Then price break structure to the bearish side. Then telling people that, oh, it is now time to sell. Many people would have actually been looking forward to sell from here, right? But price just came in an impulsive move and break through this area. And by doing so, now because this particular zone ought to be a sell rejection zone before, but because of the of this impulsive move and this fair value gap or liquidity void or imbalance, right, price have to retrace back into it. Then we'll look into lower time frame for us to get a confirmation. Now basically we are going to I'm going to show you the examples of this trade that I take, that was taken this week, so that you can really understand from this. I'm going to explain via live chart so that you can understand. Now definitely I'm going to quickly show you that. Now look at this. This is the 3 minutes time frame. I was really looking to take the 3 minutes time frame entry. I couldn't take the higher time frame when I was marking this because of the lower time frame, so that I will be able to cash this trade on time. All right, but I'm going to show you the aftermath. It has already been shared on my public telegram channel, right? You can see this. Now this is the after. Then I'm going to explain how this particular trade was taken. All right, so very quickly, let's go there. There's GBP and NZD. Right, so this particular trade was taken on the 30 minutes time frame, right? What did I see on the 30 minutes time frame? I'm going to explain that. So definitely you can see what is happening here. Right, look at this. Definitely we can know that price action, the directional bias is bearish, as price is really trading down. Now when price got to this particular area, let me mark it. Let me just have the replay here. The replay, in this particular area. Now this is really what I saw. Now definitely we can see that price action is bearish, but on his way going, price is now creating an higher high. Now broke this structure, create an higher high. Then at the same time, look at what happened here. The major thing I really want to explain here. Now price change direction here. All right, the lower low, right? We have a lower high, a lower low. Then price broke this structure again. But all these were just accumulation. But majorly, what did I see here? I saw that this particular block, right, broke structure to the upside here. It broke this particular structure to the upside. Now, because of that, majority of the people would have, now because of really what happened here, we would have really been looking forward to buy this particular price from here, or maybe let's say this particular area, we want this particular zone to serve as a liquidity. Then we want to really buy this particular price action from here. So let me tag this as a bias rejection zone, or let me just call it the buy rejection zone. So I'm going to put it here. So definitely I'm expecting price to pull back into this particular zone, then for me to just continue to go higher, knowing fully well that price change direction here. But let's see what eventually happened, right? So we're expecting price to come back to this. Now look at this. Price did not even retrace into that zone once. It just broke it with an impulsive move. Then what do we later have? Price eventually broke this major structure, then is now in line with the former structure that we are experiencing. That is already established on this particular pair. Now, by trading this with an impulsive move, now we are expecting this is supposed to be our buy rejection zone, right? It's supposed to be our buy rejection zone, but now it will now be where we are expecting market to just come back to, right? We're expecting market to come back to the zone, right, in a compressed manner. Then we want to trade it down, right? Don't forget that particular zone was formerly a buy rejection zone, but now because of the rate, now you can see this particular price action broke structure here, but the rate at which price actually broke through it now give us the opportunity to start looking for this particular zone. Now there are two zones that we can now look to sell here: this particular fair value gap here, right, or the former bullish structure we are going to mark it this way, or the new bearish order block that was now formed now. So whichever zone price retrace back to, that is where I'm going to look for lower time frame entry. Now there might be some time whereby price will just come through this particular zone and will not really give you any entry pattern. Then we'll just come to this zone, and this is the major zone that's going to work out. Now, if you ask me which one is really more reliable for me, I will choose this one a million times, this particular zone. But sometimes I just really want to trade, right, and having seen that price really broke through this in an impulsive move, then I might also try my luck by really putting it here. Now, what is the probability of this or the hit rate of this particular zone, right, is really also very reliable, but I trust this extreme part the most. But anytime I see these, and if it is a higher time frame, just like you can see on the 30 minutes time frame, then I want to see maybe 3 minutes time frame, or 5 minutes time frame, or even 1 minute time frame for me to pick my entry. So let's just see what later happened on this pair, and we're actually going to see it. Now we can see what happened. Then price eventually came back into this particular rejection zone even after creating a liquidity grab. Now price created a liquidity grab for us before price came back into that zone. You can see it broke structure, then price created a liquidity grab for us here, right? Then what did I do? Now let me quickly cut this off and show you what I did here, and show you also on my before chart. Now on the 3 minutes time frame, so let's see it. 3 minutes time frame, let's see what happened. Right now on 3 minutes time frame, I saw this particular zone also took out liquidity. This took out liquidity. Now for some of my students that are trading SSP, you can also use this as an SSP trade, whereby when you've already gotten this particular zone here, then you expect your LPC pattern, SSP pattern to be formed in there. Now let's go back to 3 minutes time frame. So in this particular area, so I want price to be broken. I want this particular zone to break, and majorly I want to at least do structure to be broken before I am really going to use that to trade. So let's see what happened. Right, so this was when I got to the market. As you can see it here, this was when I saw the market price action break through this particular area. So I marked this particular zone as the zone I really want to take an entry from. As you can see it again, all right. So that was the zone I marked. So I was expecting price to tap me in that particular zone for me to be a seller in this pair. Knowing fully well that I'm trading a fair value gap, then definitely I can as well try my luck and put my target at the next liquidity zone, which might really be this particular area. Then at the same time, I can just put it at the 50% or just for me to go for 1 to 10 risk reward ratio. But this particular trade, I was aiming for 1 to 14. Right, it's actually 1 to 14 that I put it at, right, because I saw this particular fair value gap here also. Then I want this particular low to be taken. So that was where I was expecting my targets to get to. So let's see what eventually happened. So I was tapped in by this particular trade, as you can see it here. So this particular trade. So let's go to 15 minutes time frame now and see how this particular target will be met. All right. So and that was it. So this particular trade just got to my target, and that was it. And this was the aftermath of that. As you can see, it was already posted on my public channel. So this is really how I took that trade, as you can see. So let me quickly give you another example, right, which was is also GBP NZD. I did not take this trade anyway, or I'm really going to show you that now. It's just the same concept. Definitely price action is definitely down, as you can see. So what happened here? We have a last candle here, right, that broke market structure. Now let me just call this off. Let me cut it off so I can actually show you that now. So we have this particular last candle now, break market structure here, break another market structure here. Definitely we're expecting price to pull back into this zone, right, for us to be a buyer. But look at what happened. Now price just straight through it. Now you know the characteristics of this is that price must not just, maybe price is now retracing back and is now moving in a sluggish manner, and when it now comes to this, then we just have that impulsive move. No, that's not what I'm looking for. Definitely we are looking to buy in this particular zone, then price just traded into it in an impulsive move. So in that is the most valid one that we are looking out for. So let's see how price eventually traded into that and how we could have really taken an entry here. Now this is the zone here. Now this is the order block, right? Then you would have definitely go to lower time frame, maybe 1 minute time frame or maybe 3 minutes time frame at the same time for you to look for a lower time frame entry. So what can we see here? So we can see this particular order block is rejecting on this, so this can actually be our entry, or definitely this one that is just forming. So let's see how this will be formed. All right, so I can as well mark this particular zone as my entry. 3 minutes time frame for 45 minutes. So my entry will be here. Let's see if this trade will be triggered. Then my stop loss maybe above this particular high here, maybe about 5 pips. So we can also target 1 to 10 risk reward ratio as the case may be. So let's just see what happened, and we are tapped in. Right, so let's go to maybe 45 minutes just for us to extend this up if price would get to our target. Right, and that was it. Can you see that? So instead of us to be looking forward to see this particular zone being retested as a buy rejection zone, then we can expect price to come back to our FVG, right, for us to trade from there. Now this is really to take, right, for us to really trade from this particular area. So this is just how you can trade this particular stuff. Now let's look at the last one here, GBP USD. Now this trade really happened this week. I wasn't able to trade it because I was not really in, and that was last week anyway. You know, it was, I guess, on Monday or Tuesday. Right, it was on Tuesday. I was not on chart by that time. Right, I had to quickly have to rush out. Now this was when I saw this particular pair. I was not able to trade it, but I was actually really looking forward to that thing. Now definitely this particular price action is also bearish, as you can see here. Now what do we have here? This is the last order block that created this impulsive move that breaks structure. Don't forget, you must have an impulsive move that breaks structure to the upside, whereby people traders will also be expecting, all right, they will be expecting price action, right, to be formed around this particular area before they can trade. And this is really a very valid zone, right, because price is rejecting on this block, and definitely we might really be looking forward to see price traded from this particular zone. So let's go. Let's see how price traded through it. Then price just have an impulsive move that broke through this particular zone. Then what do we have next? Then we can see how price now traded back into it. Now this is 4-hour time frame. Then you can go to 15 minutes time frame and begins to look for your entry setup. So when we get to 15 minutes time frame, there was no valid entry, but definitely we have our SSP pattern here, and we are trading SSP. My student, we have a 3-8 pattern. Then you can go to 1 minute time frame or maybe 3 minutes time frame for you to begin to look for lower time frame entry. So we have the first one, the second one, then the third one, so you can begin to look for that. But definitely I'm not going to teach that here, right? That is going to be for those students that are trading SSP in my class. Right, so definitely price broke through structure. We can see this other block reject on this as an impulsive move, break this particular area, break this particular low. So I'm going to be looking forward to see this, maybe divide this into 50%, then we can begin to look for 15 minutes time frame. This will go to 1 minute time frame for you to look for lower time frame entry. So when I get that, so where am I going to trade from? So I can see this particular structure reject on this, then this break structure. All right, so I want this particular zone to be my trade. Now because this is really out of my trading hour, right, I will definitely, as you can see, I will definitely, you can see this is around 6 p.m. my time. So I have to add extra pips in case this trade is actually going to get into Asian session. Extra pips maybe to this particular high. All right, I'm going to put it like that so that I can really be safe on this particular trade. So that's going to be my trade. Let's go back to the 1 minute time frame. Right, and price has already rejected on that zone, and that shows we already have an entry. So let's see how this trade will play out. Now your target, your ultimate target can be your 4-hour zone, which would be this particular area, or let's say this particular area. That's where we want to be taken out. So let's go back to the 15 minutes time frame, or you can just go for normal 1 to 10 risk reward ratio. All right, 1 to 10 risk reward ratio. That's what I've been teaching you guys here. 1 to 10 risk reward ratio. All right, that shows we are risking 1%. You want to bank 10% from that. So that's going to be where we want to see. Right, so let's see how price will get to that particular zone. Then before we now target the higher time frame liquidity zone, the higher time frame, which is 4-hour liquidity zone, will now be this particular zone. Let's see how many hours do we have that. That's about 1 to 29 risk reward ratio. So let's see on 1 hour time frame, and price just get there. So this is really how you can trade fair value gap, and these are the opportunities I would have traded I've taken this week, but I was able to catch just GBP NZD, and it has been posted on my Telegram channel. Right, this particular trade setup was also shared with my special students, those people that paid $2,500. Right, and this is just to announce to you, right, the mentorship class will be opened on the 15th of this month. So if you really want to learn much more, and if you want me to guide you and mentor you in trading, right, you can really join our class. We have a $550 class, then we also have $2,500 class, which is much more of a one-to-one class, then also for you to get all my trading setup. Then not only that, right, if you are not, maybe you can't afford all this fee I've already mentioned, $550 and $500, now you can as well leverage on the free materials I'm providing for you here on the YouTube channel, and also the chart I'm posting on my Telegram channel and even on the Instagram for you to get better. All right, guys, thank you for listening. And if you really gain much more from this video, please click on the like button. And if you are yet to subscribe, please kindly subscribe to this YouTube channel, and let's get this YouTube channel growing. All right, thank you so much for joining. I will see you in the next episode.